like with MMTLP, um, this stock that we've been following because all sorts of weird stuff are happening. But there's 165 million shares. They minted 500 billion coins that represent this thing. So how are you going to have a one for one if there's 500 billion of them, right? And they just sell them at it's trading at $1. I'll sell it at $1. 500 billion, I've made $500 billion or whatever is potential out of that. And it's, I think, is all just smoke and mirrors. It's
You
you
like
know
it's literally just fraud. Like
yeah, it's just straight
literally.
fraud. And this fraud happens all the time. Like if you have a gold mine you want to sell, right? You want to make sure that it's got the highest, you know, assay of gold possible. So you do what's called salting the mine. You buy some gold, you throw it around the mine so anyone comes to inspect goes, oh, there's just gold laying around everywhere here. This place is worth a fortune. And that's an old tactic they used to do. So, you know, like fraud isn't new. It's just this is a new way for them to do it.
Yeah.
It's just it's a twist. It's a twist on an old classic. And
Yeah.
you want a blanket. I
Oh, the
will.
doggo's
Okay.
here. Awesome.
Yes.
Do you want to give the TLDR on the MMTPL thing? Because I am talking to someone tomorrow actually for the podcast about it. I'm talking to Bird Lady Roller Pigeons.
Oh, nice.
Yeah.
Yeah.
So she's going to give me the
Yeah.
real story. But like, do you want to give me the TLDR for people to preview that if they haven't heard about this story?
Yes. Just like any other stocks, this thing was naked shorted by money market makers and hedge funds and everything. Um, Likely to the tune of billions of shares, at least 300 million, if not more. That's the censuses that have been done show that there's probably 300 million plus, and very likely more than a billion shares. And so this oil company is called Torchlight. They were during COVID when oil prices went negative, and people are like, "Oil prices went negative?" Yeah, because no one was flying, no one was driving, no one was shipping anything. All this oil still getting pumped out of the ground. They had nowhere to store it, so they had to pay people just to take it off their hands, right? So oil went negative, and Torchlight is a prospective company. Like they've got a big giant oil field. It's got 3-4 billion barrels of oil, but they don't have the infrastructure yet to like move it anywhere
Mhm.
and to pump in large quantities because they're still raising capital to like develop this field. So shorts went, delicious. Oil's negative. Let's hammer this company. And they shorted it down to, I don't know, 21 cents or something. I think it was the lowest it had gone. And they're about to be delisted by the NASDAQ because they've been under $1 for too long. And along came Metamaterial, this Canadian tech company, and they said, "Hey, we want to be listed on the Nasdaq. You guys are about to die. Let's merge. We'll take your ticker, and
Mm.
then we'll just sell off your oil assets and give everyone a special dividend who had your stock." And fortunately, I was like, "Okay." And so they did their merger, and when they merged, for every two Torchlight, you got one Metamaterial, and then you got, if you had Torchlight, you got a one for one of this preferred share, this preferred A stock, that wasn't supposed to trade, that was going to represent holdings, like the assets of this oil field.
Okay.
And at the time, they're thinking when they sell out the oil field, everyone would get like $1 or $2 a share, and cool. Like I bought at 87 cents. I was thinking, okay, if I get $2 out of this, well, I just made more than 100%. I'm cool.
Yeah.
And and but in the meantime, oil started going, and so people started calculating, going, wait, this dividend might be like $20. This dividend might be $30. This dividend might be $40. Holy smokes! So like oil's over $100. This dividend could be as much as $100 a share. And uh, so that was June 2021 when they did that merger. These non-tradable shares went to everyone's account who had Torchlight, and you're supposed to sit there. Like, can't trade. It's just going to sit there, and eventually they'll sell the oil fields, and that those shares will turn to cash, and then you're done,
Yeah.
right? Well, October 2021, all of a sudden it started trading, and everyone's like, "Wait a minute, why is this trading? This is supposed to trade. We were told this will not trade. This is not supposed to trade." And it started trading for like $3, and all of a sudden people are like, "Wait a minute, I can buy more." So they did, and people bought more, and they bought more, and they bought more, and they bought more. They're going, "What's weird?" Metamaterial, the company that had merged and everything, they're now the parent company. They went to FINRA and they said, "Hey, FINRA, this isn't supposed to trade." FINRA's like, "But it is." So, tough shit.
Wait, hang on,
What happened
hang on.
was,
Hold the phone there a second. So there was a share that shouldn't be traded,
yeah,
and someone went to FINRA and went, "Yo, lads, this shouldn't be trading." So
yeah,
therefore, there's some shady, some sort of weird, quite possibly illegal activity going on. And
yep,
FINRA were like, "Eh,
pretty much. So
okay."
GTX, which is this market maker that's owned by Ari Rubenstein, and I can't remember the name of the other one that he got to agree, because as long as you have two market makers or willing to trade something back and forth, you can create a market or something. Is basically what FINRA is saying. But if you look at the FINRA rules, if you want these two market makers to exchange something back and forth, you have to get the permission of the issuer. So
Okay.
Metamaterial never said, "Yeah, you can do it." What they did was is they essentially forged documents from when Torchlight still existed, saying this is all, Torchlight wanted this stuff to trade, and they gave it to FINRA, and FINRA just rubber stamped it and allowed them to create a market. So this thing just started legally trading against FINRA's own rules, against the law, against the wishes of the company itself. And so, Metamaterial and the board, they're trying to figure out like how are we going to get this, because this is causing a problem for us. Like, we can't sell off the assets as long as this thing is tradable. So we need to get this thing off trade again. So this summer they issued an S1 to the SEC saying, "Hey, we want to make this a private company. We want to remove it from the exchange, make it private, and we're going to promise that we will not look for a buyer until it's private." And but let's happen. So they did it in July, and then SEC took its sweet time, took like 5 weeks, and so like, "Okay, this is pretty good. I'm gonna need you to make some amendments to this filing and submit again." So they make their amendments, submit again, and then they take another like 5 weeks. Like, "Okay, pretty good. There's a couple more things we want you to change." Now it's like October or whatever. Submitted a third time. So they submitted a third time, and like, this is it. This is in November. Like, this is it. But since it's been now 4 months, we need you to send all of your updated financials for the last quarter, and then we can approve it. So somewhere around like November 25th, they finally said, SEC said, "Okay, you can go private." And the rules are they have to give at least a 15-day notice to the markets that they're going private. And so they did that. They said, "Okay, on the 12th of December, we stop trading. On the 14th, we issue these new paper shares that are in a new company we're calling NextBridge, which is now the holdings company. This cannot trade. There's going to be no QSIP. It will not be on any exchange. If you trade it, we're going to shoot you in the face." I don't know what the exact rule will be, but like, it's not going to be electronically traded, so you're not going to be able to do it.
Okay.
We're going to be private. We're private. We're private. We're private. We're private. And then they went to FINRA and said, "Hey, FINRA, you have to issue a corporate action to let the brokers know, like, because the brokers, they've got 10,000 tickers to take care of. They aren't paying attention to stuff. They need like be shaken and go, 'Oh, I got to pay attention to this,' and be told this is going to stop trading. You're going to have to remove this ticker from all of your brokerages, and then you're going to get issued these paper shares. Everyone's going to get these shares." So FINRA didn't do it. 2 weeks went by, and finally on the 6th of December, 6 days before this whole thing's supposed to stop trading, there's 7th, 8th, 9th, and 12th, so 4 trading days left. They finally issue a corporate action saying, "Hey guys, turns out this ticker is not going to be trading anymore. Because of settlement, if you buy before the 8th of December, he's got T+2, you'll get your NextBridge shares. If you buy after, the settlement is going to have to be up to whoever the seller is, and you have to figure that out for yourselves. And then the ticker is going to be canceled after trading on the 12th. They used the wrong term. It's not canceled. It's deleted. So they had to issue another one on the 8th, changing canceled to deleted, because they mean two different things. If you cancel a share, it means like the company went bankrupt, doesn't exist anymore. Therefore, you have to pay back any of your short shares.
Yeah, they get
But
banned
if you
from
say
Twitter
deleted,
and
yeah. So if you say deleted, it means like the stock still exists. It's just not on the exchanges. So they had to change that on the 8th.
Okay.
The brokerages were all saying, okay, so the last 2 days it's going to be closed position only because we got all these shorts out there. We got to close them all. So the 9th and the 12th are going to be all closing positions. So you're not going to be able to buy in because it's just going to be a pain in the ass for settlement and stuff. So closed position only. If you want to sell, you can sell. And we're going to make all these hedge funds and stuff under us close their positions. At midnight, morning of the 9th, FINRA, is what I believe, looked at the books, realized how many short positions there are, that there are 300 million to billions of short positions. We looked at the level 2 data of what people were listing their stocks for sale, which were in the thousands per share. Talking MOAS type numbers, 15,000 a share, 25,000 a share. This is what's being listed in the level 2s. And they went, oh my God, this is going to cost us trillions of dollars. This is going to crash the entire market. Like, this is potentially like a third of US GDP just listed in the level 2s on this one stock. And they went, oh crap, there's going to be an extraordinary event, halt all trading. And we're just going to halt trading until the ticker is deleted, and then everyone's going to get their shares, and everything's going to be all fine. Well, that means the shorts never got to close their positions. And if the shorts never close their positions, then no one can get their next bridge shares because you're supposed to get this 1-for-1. And they only issued 165 million paper shares. But if there's a billion out there, then no one can actually get the shares that are promised. And so we're how many days? It's 25th. So we are 30, 40, almost 50 days, getting close to 50 days past issuance of these things. And no one has their shares.
Wait,
and
still?
So still, like a couple people managed to like transfer into a registered agent, but jumping through a lot of hoops. And the number of people who actually have like legit shares aren't very high. And a lot of the ones that did transfer discovered when they called the transfer agent, like, hey, also make sure my stuff are in there. And the transfer agent's like, actually, you don't have shares. They sent over these weird warrants. Like, we don't know what's going on because these aren't actual shares in the company. These are warrants, and we don't know what the broker is doing. So right now, you really can't guarantee that anyone has shares in this company. It's fucked up. And so
this is just fucking GameStop all over again.
Oh yeah. But it's like with this tiny little, it's only 65,000 shareholders in this company, thereabouts, not like the 4 million or whatever might be in GameStop. And so there's some lawsuits that have been filed. There's one in Florida by this young woman, Rosa Tawil. And hers is really brilliant because FINRA, because they're a self-regulating agency or organization, and they have this like power from Congress to like do this job that the government should be doing. They got certain protections about lawsuits, like you can't sue them for monetary damages, because if you sue FINRA for monetary damages and you destroy FINRA, then FINRA can't do its job anymore. So there's
what sounds like FINRA can't do its fucking job anymore. Hey everyone, thanks for making it right the way to the end of the podcast. I love that you tuned in this long. Do me a favor, hit subscribe, because 80% of you bastards are not subscribing, but you're watching my videos. See you next time.